Good morning, everybody. Welcome to the ARMR Report and our morning meeting. Thank you for joining me. Let's dive into changes made yesterday and changes to strategy going forward for me. All right, yesterday was an insane day. Massive volatility, big volume selling all day, right down to a key gamma level. And then, of course, the obligatory mean reversion into the close back up to the ARMR VWAP. That rally back to the VWAP, am afraid, is masking the reality of what's going on in the market, which is a risk monitor red max cash market. That's it. There's no other way to describe it. That's what it is. Markets during that time can have extreme volatility. That's part and parcel of bear market. That's part and parcel of selling until such time as the algo changes. This is a bear market and we're headed to the lows. That's a fact. And the volatility yesterday proves that out. Now, I'm more than happy to change that. Risk monitor changes, SPY algorithm goes positive, great, change that opinion. But until then, it's about protecting capital and carrying a lot of cash, doing research and getting ready for the next cycle. Okay, so this is what we're looking at yesterday. And I know it's very tempting to put lipstick on the pig and say, oh, well, it closed well off the lows, and that's a good thing, and it could be setting up a bottom. It could be, who knows? What we do know is that we broke the uptrend. Risk monitor went red here. Market tried to go higher and failed, broke the uptrend, now in a downtrend. There's nothing attractive about that hammer. Markets were down here at 130, rallied back at the end of the day. That was pure gamma positioning. Huge volume coming in during the day, and then boom, light volume snap back into the close. Classic type of selling from a institutional straight down selling, and then the obligatory mean reversion in the afternoon. Same thing with the NASDAQ 100. Same thing with the small cap index. Okay. So is there a potential that that set up a bottom? It could be, and we'll find out over the next couple of days and weeks, and we may get a risk monitor green and we'll put some money to work. But what I'm doing here in my portfolios going forward is I am redoubling my efforts, refocusing on algorithmic execution. And I will not be putting any position in the portfolio, ETF, individual stock, I don't care what it is, into the portfolio without ARMR algorithms given the entry point. So we already run money using the algos for big indexes. And what I'm saying is we've got individual stock algorithms that I tend to use, but not, on a very strict basis, right? If you're in a kind of more of a bull market, you can get away with moving a little bit faster and necessarily not being as strict. But going forward into 2023, it's all about algorithmic execution for me on every level. Okay, so if we have an entry point in a name that's on the whiteboard and I want to add it to the swing strategy, I'll do that. It's algorithmic based. If I want to own precious metal stocks, they're going to have to go through the same process. We've got the algos to do it. What it's going to do is reduce the amount of trading we're doing, focus all of our attention on highest probability entry points. Got to be willing. Here's the caveat. I've got to be willing to miss things. Things are going to go up without me. I don't care. I'm looking for the high probability entry point where reward is worth risk. That's what I'm looking for. When I see it, I'll put capital to work. If I don't, stays in cash. Most conservative portfolios, following the risk monitor, making money this year. All they do is follow the algos. More aggressive portfolios doing other things around the risk monitor. It's been painful. Going forward, everything has to line up with an algorithmic entry point where you can't put positions on. That's how I'll be running money. That's what will show up in the ARMR portfolio page of our website and on the ARMR portfolio updates that you see when I'm adding or subtracting something. Okay. So to that end, when I go look at let's say GDX, GDXJ, SILJ, which I took out yesterday, and then of course they rallied back, and it looks like the market's going to be up this morning, so things might go higher. But when I look at those ETFs, they're just not at a point from an algorithmic point of view where they should be added to a portfolio yet. So I'll wait. They may be, who knows, by the end of today. Could be. This is a very simple process. Got a computer dedicated to it over here, a workstation dedicated to it, running the algos, looking for entry points. So that's what I'll be doing going forward. Got some economic numbers out this morning. Market didn't like it. Now it likes it. Market's rallying. The market's just bouncing around before a 3-day weekend. So nothing that really happens today is that big of a deal. It's thin trading. It's Christmas on Saturday. Markets closed Monday. You could almost take today off if you want. What we will be doing is focusing on day trading again. So let's dive into that, because our day trading strategies are working quite well. We were able to capture some profits yesterday trading oil and gas again, which is not easy. And let's pull it up over here. So following our simple entry point, it really works. It works every day. As you can see in here, these white boxes are the time of day when the market, when oil implodes. What we need to see before we get long oil or natural gas is a sell-off. It's pretty aggressive that lasts for over an hour. Once that's over and we get the reversal buy signals here, we get long and we trade it out on the way up. Okay, we were able to make money here. We made money on that trade. That was a beautiful trade. Okay, and we actually made money yesterday on this small trade. And I think Eras popped on that trade at the end of the day and made money again. It works almost every time if we're patient. And the key here is to wait for the sell-off of over an hour. Don't fire bullets at oil or gold because you think they might break out to a new high and run. You can do that, but that has a low probability of working. So if we're day trading, we need the highest probability entry where a reward's worth the risk. And that setup occurs after the dump. They hammer these things for over an hour. And when that's over, it's the snapback rally that offers the best reward to risk and the highest optimized entry point. So we'll keep going after that. Today, it seems like these things give these opportunities almost every day, almost. And yesterday it was twice. Same thing for natural gas. Natural gas a little bit harder. And so it still works though. Still works. Natural gas, we made the money on that gas right here. This was amazing yesterday. You know, when I say amazing, if you could get in on an opportunity, there's the sell-off. We got long, it pops up, we book profits and raise stops to break even. Comes back down, we get out with a small profit. If that's the worst we're doing on these trades, we win, right? Some of the days it skyrockets up 9-10%. Other days comes back, we're out with a little bit of a profit and the thing imploded. And it didn't even have a rally back late in the day. Okay? So it's really, really ultra important to wait for the hour-long sell-off. Here's two opportunities the next day. Right? Sell off in the morning, run. We made money on that trade. Implosion again, setups in the afternoon, back to the VWAP, make money again. This is a trade that really works, and we're going to keep at it. Let's thank Eras for forcing me to continue to look at this asset, and then, you know, just kept working with the algos trying to find the right strategy. And this is what really works with a high probability and the reward's worth the risk. So we'll be looking for those trades again. We continue to charmer trade. This was an enormous trade yesterday. Now let me just go over some of our rules when charmer trading, so you understand what we're doing here. It's very, very important what I'm about to tell you. Okay, so let's just go over the charmer trade real quick. We look for the VWAP coil. This is an ARMR VWAP, the ARMR volume weighted average price in the morning. and the ATR, the ARMR average true range high and low, tight around that VWAP. That's the coil. The trigger is the breakout of that coil. That's where we get long. That's number 2 on this list here, right? We book some profit on the first extension bar. I don't care what it is, 25%, 30% of the position, whatever you want. You've got to cauterize your risk. So here's a couple of things I want to share with you if you're charmer trading. Number 1, you got to cauterize your risk as soon as possible. When it pops, you book a profit, you raise your stop to break even. The ones that work do this. They skyrocket and never get close to the stop. So ones that are getting close to the stop or hitting the stop, it's not our trade. The probabilities are wildly against us that it's going to keep going. There's no point in using a wider stop. You just lose more money. The object of charmer trading is not to be 9 out of 10 on charmer trades. If we trade these right, literally, we could be right 3 out of 10 and make a lot of money, because the ones that work skyrocket and the ones that don't have tight stops. Okay. But we're coming in at a level much higher than 3 out of 10. But I'm just saying, if you trade these correctly, you have to understand any sign of weakness, you got to take it out, because the ones that work never show weakness and skyrocket. Take a look at what I'm talking about. Okay. These are the trades that work. Extension bar, book a profit. The low of the extension bar is the stop now. So now you can't lose money on the trade. And you just sit back and watch the magic work. It skyrockets. Okay. 4 right up here is where I would take a profit, because that's the first time, believe it or not, on this run where this bar takes out the low of 2 bars ago on a closing basis. And it actually takes out a low of 3 bars ago. Okay. So clearly that's the first time to exit the position. So another third of the positions taken out here. It consolidates. Number 5 is the final stop. Okay. The final stop is right here, which is the VWAP. Let it consolidate. Nothing doing here. Skyrockets again. Now, for me, at that point, when it skyrockets again, I don't have to wait till VWAP exit. You could if you want to, because you just never know where these things are going to end up. All right. So the exit would have been right there later in the session if you're using a VWAP exit. But for me, when this thing skyrockets again out of a base, I'm going to raise my stop to the very least to the extension bar. That big up bar, my stop would go here. Or you can again use the low of the last 2 bars, right? So it skyrockets 1, 2. So this bar right here takes out the low of 2 bars ago. And that's really where we should be out of that trade. Okay. When there's a follow-on trade later in the day that skyrockets, and again, it takes out the low of 2 bars ago, the trade's over. As you can see, that literally marks the top. So depending on how you want to trade it, I would put a 5 here, because there's the low of 2 bars ago. Again, that's one of my favorite trailed stops on an aggressive asset. It works so well. And 2 bars ago means 6 minutes ago. It's the lowest 6 minutes ago. Okay. So you're booking more profits here, or you're just 100% out. You've made so much money on that trade. How greedy do you want to be? And if you still have a piece on, then it has to be exited right there. Okay. So we are going to charmer trade. We are going to index trade. I know here's a trade that ARMR Insiders got yesterday, and it was really a great move. Paul highlighted this and shared that he was putting a position on right there. And what I did was highlight for you. This was a volume reversal trigger. This is my favorite reversal trigger. Okay. I got 7 listed for you for day trading. The number 1 reversal trigger by far for me, where I make the most amount of money, is the volume reversal trigger. So an asset sells off at least for an hour, sometimes longer than that, but at least an hour. Then it hits a location, in this case, coming right down to a Fibonacci extension of ours, which also happened to be the put wall from Spot Gamma, and sets up a reversal. And it does it within a 12-minute window. Down on volume, take out the high of that volume bar within 12 minutes. That's the trigger. Get long with a new low on the day, or really, it could be the low of the bar that takes out the high of that volume bar, okay, as your stop. And then the stock, the index traded all the way back up to the next gamma level. And we talked about this trade as it was unfolding. I would book some of the profit right at the VWAP, and then the rest of the profit right at the ATR and the first standard deviation above the VWAP. And it actually went out a little bit higher, but that's where we would be out of that trade. Okay, so we're going to continue to day trade indexes, energy, and charmers following these rules. It's been really a real profit center, and we're going to continue to focus on that. Okay, and so that's really more of a focus when we're max cash and we're in a bear market, and risk monitors are red. A lot of cash in the portfolio. Great time to focus on day trading. When we start putting all that capital back out, risk monitor green, we start investing. That's different. So I'll be focused on my day trading and research. I want to do some research today on this chart. This has got to be one of the best charts that William O'Neill and Services is showing us, this med pace. I don't know anything about it, but I love that pattern. So I'm going to do some research on that today. We're going to get on the conference call. That's Tesla. It looks god awful. I don't know, what's going on there, but maybe Kathy Wood does. She just keeps buying it. That's just a great cup and handle base, relative strength breakout, outsourced clinical development. So this could be an interesting story. I'm going to listen to it and see what the margins are and if there's any moat, any barrier to entry in the business. You could see fairly solid revenue and earnings growth right through a difficult environment. So we're going to do some research on that today. That's our highlighted stock of the day. All right, guys, any questions you got for me before I go? If not, I'll see you all on the live desk, 9:25. Kevin asks, any interest in smaller position if the weekly close is higher? That's a great question. And so what I'm doing, Kevin, is I'm looking at the armrAlgo for ETFs. And if at the end of the day today, that algo gives me a risk on opportunity in GDX, GDXJ, SILJ, I'm happy to put the position back on. As of right now, algo says can't put a position on, should be out. All right. So if we get the entry, I'm happy to put the position on at the end of the day. And it would be a normal position size. I don't need to make it smaller. It's going to be a normal size. Algo entry, which will be risk on for precious metal stocks, I'll put a position on. Okay. So to be determined. Let's see where we are at the end of the day and make a decision. Make an algorithmic decision. What that really means is highest probability where reward's worth risk with a defined stop, put the position on, leave it alone, let the probabilities play out. That is my sole focus on everything I'm doing. If there's anything about 2022, when I look back over the year, if there's anything about that year that proves theory, is that this is the year proving that algorithmic investing trumps everything else. We will still make a lot of money when the bull market starts following algo entry points, right? And we can, during those periods, if we want more alpha, we will find it by doing other things. Could be bigger position sizes, what have you, but we've got to stay disciplined to entry points. And algorithms are the best way to do that. It takes emotion out of the situation. I don't want to miss precious metals mining stocks. Let's put a position on. That's not a reason to invest. It's a reason to put it at the top of the whiteboard. So we're watching it, use an algorithmic entry point to execute, to take the emotion out of the decision. All right. So it's at the top of my leaderboard. I want to own the metal stocks. If they give me an opportunity, I'll put the positions on. All right. And to a certain extent, I have to follow the ARMR rule of the road, the ARMR axiom, the ARMRism, right? Which is I pay more, I make more money. Instead of guessing whether or not these stocks are going to break out, I wait for the algorithmic entry point. Sometimes I'll pay more. I might pay less. I don't know. But I have to not care about paying up a little bit to have the confirmation that the probabilities are right and the reward's worth risk. And then I'll put the position on. Okay. So As of now, I've cleaned the slate. All I own in my portfolio is gold and silver physical. That's a core position, right? If I get an algo entry point, which we did a long time ago, that's already a core position. If we get a follow-on entry point, I'll make it a bigger position, right? But right now it's just core. And I'm carrying that plus cash and focused on day trading. That's where my head is, and focused on research, constantly reordering the whiteboard, looking for our next entry. We are building that swing strategy, right? It's paper trading now. I just want to show you guys how it works, get us comfortable with it. We might be doing it in 2023 of individual ideas that we like. I might put MedPace on there after the conference today if it sets up on an algo. So we're using algo, add it to the spreadsheet, see how we do. 2 positions of the 3 we just added got stopped out yesterday. AR and Schlumberger. Schlumberger was break even, AR was a loss. mRNA is still in the portfolio. All right, we'll carry 10 max at any one time. And we'll just keep rotating and see what the performance can be using the algos, and really that portfolio won't follow the risk monitor. I'm very curious to see how it can perform. If we can focus on the right groups, even in a tough market, and knock down profit swing trading, that'll be interesting to me. I'm paper trading it now because I don't believe it's going to work without the risk monitor going green. So what we're going to do is run the spreadsheet. We're going to see how we do during times of risk monitor red and risk monitor green, right? And I'm curious to see what happens over the next couple of months. We're going to watch this trade, right? If it can eke out a profit during red, that'll be unbelievable to me. And I suspect you'll see those profits go up significantly when it syncs up with the risk monitor. Risk monitor goes green and we're swing trading stocks. That's the time we'll make the most amount of money. I mean, that's just logic. So, the question is, can we still make money even in a tough market, swing trading individual names? That's I'm curious about. We're going to see if it works. We'll do it together. It'll be a study we do together. All right. Anything else? Anything else you got for me? Let's see. I believe. Tesla. There's some strange things going on in Tesla. I'll take, I'm going to take your political leanings, Chad, out of that comment and simply say that I personally don't think it's got anything to do with any conspiracy. Okay. I think that this is a terrible chart pattern of a stock that was up huge for a long period of time that everyone's leaning on. Okay. And what's happening now is normal. Stocks can't go straight up to the moon forever. There's massive competition for Tesla, right? It's all coming online. A few years ago, you couldn't find an electric car. Now I can buy a Mercedes, a BMW, a Ford, a GM. I mean, it's just common sense. It's just common sense. They're not going to be able to knock down the numbers like they were in the past. That's just big macro obvious to me. I mean, it's just obvious. And so for the longest time, a stock can levitate because people think he's a rock star and they love the car and whatever, but reality eventually sets in, and it's a car company. Costs are going up, competitions are getting hot. I mean, I don't think it's anything more than that, and then on top of it, you've got a CEO whom I love. I think he's great. I love him. All right. I'm not saying anything about the man and how he thinks. I think it's fun to see what he's going to do next. I love what he's doing with Twitter. But if you are a shareholder of Tesla, he's like the worst CEO ever during a bear market. During a bull market, oh God, everyone loves a maverick. What a great guy. Or during a bear market, what's this guy doing? He's crazy. He's over there at Twitter. I mean, that's just the narrative. That's just the way it is. You don't want a guy like Musk running your company in the midst of a bear market. Then that's what's going on. Not to mention the fact, Chad, that he's sold like $40 billion worth of stock. I mean, this is just common sense. When the CEO is dumping his stock, I don't care what the reason, it puts pressure on the stock. You know what I'm saying? We don't have to look any further than that. Anyway, those are my thoughts on Tesla. I look forward to seeing you guys on the trading desk. I'll see you there at 9:25. Let's have a great day of trading heading into our 3-day weekend. Take care, everybody.